Hey, good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Monday, and it's July 29th. We got one economic news release today, and we do got a week chock full of them, and we'll kind of get into that here in a second here. But today we got the pending home sales index for the month of June. We had a 5.8% growth in the month of May, and for the month of June it dropped down to negative 0.4%. So a lot of this is being reported as due to the sharp increase of the interest rates that people backed up. Another small attribute is the still lack of inventory that's out there. Now, on personal experience, typically June, July typically are slower times on the purchase side for myself, primarily because it seems like most people take vacations. So historically, I haven't looked at the numbers for historically, but it could be a combination of a bunch of them. But on paper, it looks like its rates are played a big factor, as well as the lack of inventory you have. So, because if you look at the numbers overall from 2012 in June, it was actually up from there. So we had more people looking for homes, or even more sales this June than we did the previous June. So let's go ahead and take a look at the headline news here. And basically, stock market's down so far today. A lot of it is, we had some M&A mergers that. Housing news didn't come out too good today. We do got some more housing news later this week, as well as GDP numbers for Q2. We got the employment numbers coming out later this week, but one biggie that the investors are all kind of waiting and watching for is the Fed. They're having their FOMC meeting starting tomorrow, and then they'll give their announcement on Wednesday. So with this new data and everything, they're going to be curious to see what's the plan. Are they still looking at tapering off perhaps this year on the kind of easing? So they're going to wait and see, because they're still a little jittery about the kind of easing, if any possibility of tapering off on that anytime soon. There's been a lot of speculation that maybe it might start happening in September. But again, economic data was good and starting to pull back a little bit, especially with the big spike in the interest rates. All right, so let's go ahead and take a look at the interest rates today. And so far we're having a decent day. We are up a bit and right now we're at where we left off on Friday. So we did start the morning off worse, and we were touching the ceiling, but now we're actually about where we are left off at the 100.84 mark on the Fannie 3.5. So we're trying to still close that gap that we had talked about from last week. We're still working on that. Hopefully we can get that in there. But right now, again, we could that could quickly change this week with the volatility of what news we have lying ahead. All right, so today interest rates are about the same as Friday. Thanks for watching. I hope you guys have a wonderful day, and we'll see you guys tomorrow. So stay tuned. Again, this is going to be a volatile week.